Hello everyone, let's continue with the next video in this price action series. And this is an important video about something famous in the technical analysis world. It's not a price pattern, it's not a candlestick pattern, but it's Dow Theory. From this, you can see how important Dow Theory is. Or rather, it's very important to me. It's the foundation of trading and investing. And it's what I always stick to. But in this video, I will talk about it. In a few previous videos, there were some cases where I mentioned that the price will move according to Dow Theory to the start of the trend and then decline. And then just like that, place an order without much detailed explanation, because to me, it's basic knowledge, so there's nothing much to explain. Just read Dow Theory, think about it, and you will understand. But for many reasons, I see that even now, some people still haven't read Dow Theory or don't know Dow Theory, or after reading it, they throw it straight into the trash. Because they feel it's like some academic material, dry and theoretical, with no practical value. What's trash to others is gold to me. In this video, I will talk about it and apply it to trading and investing from my perspective. And in this video, I won't go over Dow Theory again, but we'll dive straight into the charts. So if anyone hasn't read or doesn't know what Dow Theory is, please research it online first and then watch this video. I have a downtrend here. And to make this problem easier to understand, I will only focus on this time frame without switching between multiple time frames, and I also know that this downtrend will continue to decline. So the problem now is simply finding the entry point for a sell order. Let's analyze together. Looking at this chart broadly, we can all see that the price moves like this. And this is called the major trend. So here is called the key level of the major trend. This is the previous low of the major trend. When we study Dow Theory, we might have heard the phrase, within a trend, there are trends. So what does that phrase mean? It means this. The main down wave of the major trend is itself an entire downtrend on a smaller time frame. The pullback wave of the major trend is itself an entire uptrend on a smaller time frame. And this is the meaning of the phrase. Within a trend, there are trends. Within a major trend, there are many smaller trends. Okay. Let's continue to examine this smaller trend. In this smaller trend, it's easy to see right away. This is the key level of the smaller trend. And this is its previous low. Okay, now we've identified the key level of the major trend, the key level of the smaller trend, the previous low of the major trend, the previous low of the smaller trend. So the next question is, which trend will we trade with? The major trend or the smaller trend? With the price data currently on this chart, I will decide to place an order following the smaller trend. I can place a limit order at this point, enter at the previous low, stop loss after the key level, and take profit below like this. Let's move on to another example. Now I have an uptrend. And to make this problem simpler and easier to understand, I'll do the same as before. I'll only look at this one time frame. And I also know that this uptrend will continue to rise. So the problem now is simply finding the entry point for a buy order. Let's analyze together. In this case, it's a bit different from the previous case because this uptrend has just formed. Before that, it was a major downtrend. And this uptrend has just formed. And now, if we look at it more broadly, more comprehensively, we can imagine the price moving in a broader way like this. Price drops to here, pulls back to here, then continues to drop to the deepest point here. And then the price starts to rise. That's why this is the key level of the major trend. And in this case, since the major trend has just formed, it doesn't have a previous high, it only has a key level. From here, we can also see that the key level of the major trend is also the point where the smaller trend begins. But in this case, there's something special here. This is the last high of the previous downtrend. The previous downtrend dropped to its deepest point here. And then the price started to rise. This is the last high of the downtrend. The price breaks through that last high. It breaks through strongly like this, and then there hasn't been any candlestick wick or candlestick that has returned to retest this high. It breaks through with extremely strong momentum like this. So the key level of the major trend, in this case, should be drawn like this. It's better and more accurate. But if it breaks through the previous high with normal momentum, nothing special, then draw it as usual. But in this case, it should be drawn like this. It's better. Okay, so this is the key level of the major trend. And it has no previous high. Let's continue to find the key level of the smaller trend. So here, or here, one of these two is the key level of the smaller trend. If you ask me to confirm with certainty which is the key level of the smaller trend, honestly, I can't confirm. I don't know. But if you ask me to choose, I'd choose the lower one for safety. This will be the key level of the smaller trend. But in this case, whether this is the key level of the smaller trend, or this is the key level of the smaller trend, honestly, I don't care. Because if I place an order in this case, I won't look at the smaller trend, I'll only place an order following the major trend, so in this case, I don't care. I'll only place a buy limit order right at this point here. Stop loss here and take profit above. If anyone feels this order has too wide a stop loss distance like this, then you can choose one of two ways. 1. Wait for confirmation. If you wait for confirmation, you'll get an order with a high risk-to-reward ratio. Or if you don't like waiting for confirmation, then enter right here, stop loss here and take profit above. So, the risk-to-reward ratio is higher, but the downside is it might not get filled. This is up to each person's choice. the examples above, sometimes I enter orders, following the smaller trend within the major wave to enter. Sometimes I don't care about the smaller trend and only focus on the major trend, only riding the major wave to enter. If you don't understand, it might seem confusing. How do you know if the price will follow the major trend or the smaller trend to enter? If you ask about knowing for sure which trend the price will follow, I'm not certain, but based on the previous videos I've shared, and above all, based on Dow Theory, I can know which trend the price is more likely to follow, to decide on entering an order. And this is the result of Dow Theory. This part, please focus. The takeaway is just a few words. Under the same conditions, always prioritize the major trend. That's the summary. But new traders might not fully understand. Let me combine with the content from previous videos and explain. If the major trend has extremely strong buying momentum, whether the smaller trend has strong or normal buying momentum or whatever, I don't care about the smaller trend. I only prioritize following the major trend. Following the stronger one surely has a higher success rate. If the major trend doesn't have extremely strong buying momentum, but the smaller trend does, then okay, now I follow the smaller trend. But never forget that there's still a chance the price might follow the major trend. It's just that now the smaller trend has a higher probability. If both the major and smaller trends don't have strong buying momentum, then what? Well, simple, wait for confirmation. Wait for confirmation before entering. Wherever there's confirmation, enter there. No need to place limit orders here anymore. Either enter or don't. That's the simple takeaway for me. But if you understand it deeply and clearly, then you can derive even more interesting insights that I can't possibly cover in one video. Now let's go back to the chart and review the market from an investor's perspective. After thoroughly understanding Dow Theory clearly, based on what I've shared earlier. So how do we apply it to investing? Assume the chart you're seeing is of an asset you want to buy. You want to invest in, and this is its major time frame. Imagine this is the weekly chart. So let's do it step by step. First, find the key level of the major trend. You can see it right away. Here. This is the key level of the major trend. This is the previous high of the major trend. And the next step is to find the key level of the smaller trend, of this uptrend. You can see it right away. This is the key level of the smaller trend. This is its previous high. So, we've found the key level of the major trend, and the key level of the smaller trend. So how do we think about this? At this point, note that the market is still in an uptrend. And if you notice, at a time like this, if you work, especially in an office environment, you'll hear people talking about the market everywhere. Colleagues talk about the market at the coffee shop. Everyone around is talking about the market. It's very lively. Media reports a lot. Groups are buzzing with activity. Newcomers are joining in droves. And when it's like that, we often hear the phrase, when others are greedy, we should be fearful. So based on that idea, the market might decline, right? But we don't know for sure, not certain. The market is still in an uptrend now. So it's highly likely to continue rising. So it's very likely to do this. Continue rising like this. But it could also break through here. So if the price drops to here, should we buy or not? It's a great opportunity, why not buy? For me, I'd buy right away, buy quickly. But the difference lies here. When the market has been in an uptrend for a while, rising high like this, then the likelihood of it continuing the uptrend following the smaller trend is still high. But that likelihood is gradually decreasing, the higher it goes, the more it decreases. So when buying here, experienced traders will buy, but only buy a little. For me, if I buy here, I'd only buy a maximum of 20% of my total capital. But for newcomers in the market who used to buy and always made a profit, so when the price drops here, groups are buzzing, urging everyone to buy with all their profits and capital. Some even borrow money, sell houses, sell cars to jump in here, hoping this one time will change their life. That's a mistake in risk management. If the price continues to rise, those who trade by going all in with all their money make huge profits. But big profits this time will lead to losing everything later. Poor risk management will always lead to losing everything no matter how much you make. Let's say you buy here. The price rises, that's great. Price rises, take profit, and repeat according to the plan. But if the market doesn't follow this scenario, and follows a different scenario, a different scenario happens like this. Price breaks through the key level of the smaller trend like this. What does that indicate? It indicates that the uptrend season is over, and the downtrend season begins. The crypto winter, the stock market winter begins. So at this point, what should we do? If anyone has bought a lot earlier, when the price breaks like this, I think you should cut losses. You should know to cut losses. Those who bought a lot should cut some. You don't have to cut everything, but cut some. For those who bought a little, whether to cut or not is up to each person, but I think you should cut at least a bit. So when the price breaks through the key level of the smaller trend, where will the price go? If it breaks the smaller trend, it will follow the major trend, and if it follows that principle, it might either go to the previous high of the major trend, or go to the key level of the major trend. You can also see that the likelihood of it reaching the previous high of the major trend in this case is there but not high. The higher likelihood is that it will reach the key level of the major trend. So at this point, be patient and wait, and plan to buy at an average reasonable price. The price reaches the key level of the major trend, and then continues to rise. And you also see that when the price reaches the key level of the major trend, it doesn't rise straight up immediately, but it moves very hesitantly for a long time at this point. It creates a feeling of discomfort and frustration, and it's easy to give up. But the reward is only for those who are patient. And when the market enters a downtrend, you might hear from me things like, when it's a downtrend, this is the opportunity to accumulate experience, knowledge, and capital to change your position in a few years. I've said this in many videos. Even, you might hear it from others too. But honestly, no matter who says it, no matter how many times you hear it or know it, whether you can do it is another story. Knowing is one thing, doing is another. Time defeats everything. Those who are new to the market go through a downtrend season, get bored out of their minds. Most give up and go back to their old jobs. Stop looking at the market. But that's how the market is. What can you do? The more patient one wins. That's all the technical analysis knowledge about Dow Theory that I want to share in this video. Besides that, in this video I also want to share other values that are even more important about psychology, about having a strong trading mindset. That's all I wanted to say in this video. Now, goodbye everyone, see you in the next video.